There's been many issues in history that you're looking at today. The key is to move quickly. So maybe we moved a few days, a few weeks too late, but today they're taking the actions. But what's interesting today, we have about 1,500 people here from 40 countries around the world. And this is the largest gathering we've ever had in UAE, and we've really not seen it affect attendance here from that standpoint. So yes, it's a tremendous focus in China, but not necessarily the same focus in other places in the world at the moment.
When you look at what happens next with regards to U.S.-China trade, for example, do you see this having an impact on Xi Jinping's leadership?
I think there's many challenges in China. Healthcare is one of them. 30 years ago, no one had diabetes in China. If you went to medical school, you never studied diabetes related to obesity. Today, China has the most people with diabetes in the world. Incidence of diabetes are over 100 million. It is estimated today that 40% or so of the population is pre-diabetic. And as you know, the fast food from America and other areas has dramatically changed. And so they now have the most people dying of diabetes in the world. And these diseases, with the United States being the most obese country in the world and changing the weight, will also tie these countries together. But I think the message that we can't forget is how close the world is. No one is an island today. And I think the results of this will bring the countries closer together.
Mike, a broad question on the state of the global economy for you. Obviously, 2019 was a fantastic year for equity markets. 2020 also shaping up to be quite a strong year as well, at least in the first couple of months. How are you reading the global outlook for the rest of the year? And should we be concerned about perhaps a pullback from this point on?
I think we have to wait and see how virus and other things play out. But interest rates are so low. It drives you into other investments. The debt markets underpin equity markets and markets around the world. And if you looked at the fourth quarter of 2018, where we saw a significant sell-off in equity markets, you found its cause with a substantial increase in interest rates, particularly on non-investment grade debt, which now became an alternative to equity. But I think the world underestimates the liquidity in the world. 17 trillion in Japan deposited at zero. Can you find a better rate of return? Negative interest rates throughout parts of Western Europe. And so this is driving you into equity. And I think the wealth accumulation in Asia over the past 2 generations is far, far more than anyone has realized. And as those individuals want to diversify both their currency holdings, many of them are looking to put investments into dollar-related assets. And on the other side of the coin, whereas the U.S. percentage of the world's economy has decreased with enormous growth in China, India, and other countries, the U.S. management of financial assets by companies headed in the U.S. is at an all-time high, and U.S. money managers now manage more than 40% of all the investment funds in the world.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.